The size of the problem is so big today, and it's going to be even bigger in the coming years, in 2040, for instance, that we need to think about this problem as a public policy issue.
It was clear before, but it has become like a big aha, what a huge problem this is going to be for low and middle income countries. Not that far off.
Some seniors are vulnerable to fraud and exploitation. Other seniors are suspicious about banking and using financial services, and so it's important that seniors be educated about the importance of saving and the importance of using financial services in order to save so that they can enjoy the fruits of their labor.
If you're 65 and there's an age gap within the institution where they don't lend to somebody 60 and above, that's a clear barrier. So what do you do if you need credit? What is the risk profile of this segment, and why are financial institutions or regulators and other stakeholders putting these age gaps?
I think very much that women are going to be much more severely affected by this, because they are the providers. So they end up having to take care of, of sick people in the family. We see a lot in ProMujer of grandmothers who are stuck having to raise grandchildren.
It's not just one thing that you can say is to make that person convinced about getting into a program. One is to say that you have a good product, which is perhaps got a matching co-contribution from the government, which India does. The second is to say that there is a regulator in place, and there is customer protection and customer regulations that actually protect the customer. That's the second piece. The third piece is of access, which is easy through technology. And the fourth thing that we actually look at is how do you use marketing and financial literacy. So it is a thin line between marketing and financial literacy, but you've got to do that to make them understand both the pieces of the ecosystem. If either of these do not work, the person will not be able to continue to get into that pension product. So it's not that the government alone can do it, it's not that the private player alone can do it. There has to be a mix of both. For the government, it's essential, because if this population ages at the rate that it will, it is too much of it's just too high a cost for any exchequer to maintain.
And there's a question of, what is currently happening versus, what should be happening. And I guess that's where we go in and, get more data to understand whether it's savings they dip into, whether it's insurance that they have, whether they have none of that and therefore have to go out and, borrow and have some sort of business to generate income to get by. I think those are data gaps that we need to address.
And I think that financial institutions, not just in this country, but in other countries as well, are starting to focus on elder financial abuse, because it's a huge problem. 1 in 5 people in this country that are over the age of 65 have been victimized in scams, and very few are reported.
I'm speaking about Latin America. The interest rates on deposits is quite much lower than inflation rates. So how can we speak about long-term financial asset building in such a situation? I don't know of any country working on this issue. Senior exclusion issue is so big that we need much more than private sector solutions. And we need indeed not only public policies, but public subsidies to help existing seniors get out of dependency or vulnerability.